Hello, Josh.
Good morning, Richard.
Good to see you.
Yeah, likewise. Little different to start the week having this conversation. It's like it's a good jolt. It's a good morning coffee. How's your weekend?
Hey, everybody's getting a jolt this morning.
You're not lying. Yeah, I will hit that. Yeah, I think we're on the same page. I plan on hitting that for sure, though it's the most recent. Man, anything interesting happened over the weekend before I get going here? There's quite a bit I want to get into.
It was a great weekend of just being, totally away from the screens, away from the noise, with the family, in the woods, at church, all good.
Nice.
Gotta have things to get away from this insanity.
Yeah, you're not lying. Can't plan this every weekend, but my pops got married over the weekend, so I was able to unplug as well, and went out to Galveston. We were able to get a little fishing in, and you said, man, get away from the screens, get away from the chaos. You wake up on Monday, you're right back into it.
It's crazy when you think about this idea of like the metaverse and Web3, that people would want this to be like the full, reality.
Totally.
It's insane,
Yeah.
And besides that, it's not under our control. These are manufactured realities, digital realities. So anyway,
I love that you bring
unplugging is more important than ever.
Yeah.
Really, like that's the resistance. Just walk away. Just turn it off. Flip the switch, man. Get out.
I'm gonna put a pin in Web3. I think it's funny you brought that up. I'm gonna head there in maybe 10-ish minutes. But usually when we connect every other Friday, I try to start it with some sort of like, let me get a temperature check. How are things going? I think folks appreciate that. I want to continue to do that, but I want to address it at a little bit of a different angle today. I'm going to share my screen with you and point to a newsletter that you sent out a couple of weeks ago. This is your Snap newsletter, and I love the subtitle. I'll circle back to that, but we got this a couple of weeks ago, and obviously you point out Snapchat here. Their stock, their tickers dropped more than 43%. It's now below their IPO in February of 2017. Here's a cool graphic to show what that drop looks like. It's brutal. But like I said, the subtitle here was more interesting to me. $3.46 trillion in market cap gone year to date. Can you just double click on this organized crime you're talking about? I'm asking for a temperature check, but I think you do a great job laying the land here.
That's just the 3.46 trillion in, the giant technology stocks. That doesn't even include the money people have lost in crypto, the money people have lost in bonds. Everything's been going down, man. The so-called 60-40 protection portfolio. This is not a normal correction that we're in. This is the end of the leveraged economy. And the leveraged economy is something that's been unfolding for 40 years, where you could always refinance at lower rates, essentially. I thought of a good metaphor, Josh, of, just think about a house that you bought 40 years ago, right? And you paid $100,000 for it, and you had it financed at 20%, because that, 30 years ago, interest rates could have been 20% on a mortgage, right? So now for 30 years, you do nothing to the house. But more money is being printed, so the house is going up in value, so to speak, right? And you can refinance at lower and lower rates. So your payments on the house keep going down. Okay, that's the economy that we've lived in for 30 years now. Nobody did anything to the house. The house deteriorated while everybody felt richer, right? While the owners of the house felt wealthier, because the price of the house was going up and the cost of maintaining the house was going down. Okay, that's a metaphor for the whole economy right now, because that is gone. Inflation ticked in at a higher rate than anybody expected on Friday. The soft landing is gone now, right? It's like, this wasn't supposed to be where we're at. I mean, it's not supposed to be where we're at 3 months ago, 6 months ago, but Friday was like the nail in the coffin. And this is serious stuff. People have to rethink the whole way that you think you're going to earn a living, all this stuff that is, was the fantasy economy, not fantasy, but was the refinance economy. I don't know. I don't have quite a word for it yet. The leveraged economy is probably the best description I have, right? Is gone. And now it's time to deleverage, right? If you want your house to increase in value, you have to improve it. You have to work on it. Okay. It's not free wealth anymore. You don't get richer just by sitting there letting the asset deteriorate just because you can refinance it at lower rates and you have this kind of temporary spending power. So productivity has been devastated over the past 20 years because people haven't really had to work to feel wealthy. So that's all changing now. And my other subtitle is "This is Organized Crime," is the engineers of all this, they knew what this would lead to. They knew it wasn't true. They knew it was artificial. And either they knew outright or they're just so arrogant as to think that they could control something, that they have no capability to control. The Federal Reserve is not in charge. It's incredible listening to their repeated, their repeated comments. Like, why should we take anything they say seriously? Right now, they're going to come out and tell us, oh, well, now we're going to do this and now we're going to do that. You didn't know what you were doing 6 months ago. You didn't know what you were doing 12 months ago, but now we should have confidence in you. So it's serious times. And we're in the leveraged economy. People need to realize that you didn't have to improve your assets to continue to feel like something was happening. And that's the key change in our economy right now is we got to get back to work. We got to make stuff. We got to produce, become more efficient, become more productive, not get lost in these political dramas and narratives that suck the life out of everybody, while your assets continue to deteriorate.
Yeah. Great feedback. Talking about this is unexpected and zooming out to I love this, organized crime piece and the makers of this. I want to even drill in on a piece that you talked about here. Let me share my screen for you again. Here towards this is early in your article. You mentioned this 3.46 doesn't include any of the significant crypto drops or anything like that. What I wanted to talk about was here recently, Coinbase announced their hiring freeze. You can see some of the numbers here. Actually, I think you even mentioned Coinbase, which was $90 billion back in November, now down to $16 billion today. Yeah. These guys announced their hiring freeze, which not only means they're not hiring any in the future, but they had 350 offers that had been accepted that they rescinded. So there were these engineers that had options between Apple and Amazon and Coinbase and this and that, but because they had so much, desire, so much movement to get involved in cryptocurrency, they accepted this role and then the offer was rescinded. And so leaves lots of folks sort of stranded. More importantly, I think there's this interesting thing of, just a few weeks ago, we were talking about how much money these guys were spending in the Super Bowls, how much they were spending to get in front of you, the ads they were putting out, the different incentives and programs and scan this code and you get $10 and this and that. And all of that is gone. In fact, I pulled up the numbers this morning. Ethereum is $1,198. Bitcoin, $23,695. You can take this either way. If you want to just let's beat up on these guys for a second, great. If you'd prefer, we can sort of shift over and maybe you just share a little bit about where we're at in this crypto economy. This seems like we're in a straight nosedive at the moment.
The crypto economy for a while now has been a giant manipulation of the public to make the early investors wealthy. And I've been saying for quite a while, 95%, 98% of what passes for value creation in the crypto world is total BS. It's just a Ponzi scheme when people are only focused on price and getting in at one price and getting out at a higher price. You don't have any value there. You just have a Ponzi scheme and speculation, right? You don't have any real value creation. And we've been asking, where's the beef for a long time? Where's the beef? Ethereum's got a giant change coming up to go from proof of work to proof of stake, and a lot's riding on that. And frankly, I don't even really think proof of stake is a viable. I don't think proof of stake is really the essence of what cryptocurrency was, burst onto the scene to solve a big problem. I don't think that's going to solve the problem. It's just another form of centralization, now in the Ethereum market, right? Instead of in the Citadel Securities and Robinhood market. So, so these are tough times. As I've been saying, anybody who thinks like, man, this is a great buying opportunity, no, it's not the way to think about it. You got to think about surviving right now, not like, man, Ethereum was $4,000 6 months ago, and now it's $1,100. What a bargain. No, just like Snap was $80 billion, and then it was $40 billion. And you think, what a bargain. And then all of a sudden it's, $15 billion. Okay. So that's the reality of the markets that we're in right now. This is about surviving. This is about thinking long-term. This is about looking for real value, that you're okay, waiting 5 to 10 years to materialize. But people do not have any clue what they're doing when they just plunk down money to go buy Dogecoin because it's cheap. Sorry if I'm a little irritated today, but it's painful to see everybody go through this again.
Turn off the notifications.
And it's not like, I'm telling you, it's going to get worse. Yeah. I don't know when, but people have to be dispelled of this illusion that that they're going to beat the markets. And that they don't have to work, and that they're just gonna get rich.
This it's about surviving. I want to ask one more question, but I do want to circle back to that, because I think that is what I want to drive to today. Is I feel we're headed towards this area where people are wondering, like, what does survival look like? Let me put a pin in that. I had one more question, just because we're on crypto and cryptocurrency. I wanted to see if you had seen anything like this, or trend wise in the market. I'll share my screen one more time, and then I'll come back to this this survival tactic. Give me a sec. Share my screen here. I was curious, since partnering with you, and we've now been working together over a year. One of the more interesting things that, early when we first started talking, it may have even been on my podcast, you brought up this idea of this like covariance matrix, and we're able to see what assets are correlated with one another. This graph here, this little plot graph, while it's an eye chart, does a really good job at showing the movement between the S&P 500 and Bitcoin over the last 98 trading days. And what's interesting here is Bitcoin in the S&P 500 of the last 98 trading days have moved in the same direction 73 times. So of the 98 days, 73 days, they're moving in the same direction. And I know from that covariance matrix, if I remember right, that column of Bitcoin lit up like a Christmas tree, and they were all almost a solid 1 or a solid 0. Like there was almost no correlation to any of the other tickers that we would have pulled up there. The fact that they're moving in the same direction most of the time is interesting to me. And I'm curious if this is just coincidence, or is this worth drilling into? Have we found something? Do we feel like that uncorrelation is changing, or are people just getting, I mean, we're headed towards a recession. We're just selling everything. Like this is just part of the movement.
I mean, there's two things here of why the correlation between Bitcoin and the stock market has increased. Okay. And one of them is that it's not just Bitcoin, you know, the correlation between stocks and bonds has increased, right? And they're supposed to be negatively correlated. You know, the 60-40 portfolio, the 40% bonds is supposed to buffer you during these times when stocks are falling, but no, bonds are getting crushed too, right? So there are times like now when we say all correlations go to one, right? And that's when we get into these collective behavioral cycles where everybody just starts freaking out in one direction or another. Okay. So that's one reason why the correlations have increased. And the other one is what Ben Hunt over at Epsilon Theory, you know, he distinguishes between Bitcoin and Bitcoin, you know, with the TM after it, right? And that is that these transaction-based businesses that just make money, like off of being buying and selling of others, right? Be it market makers, exchanges, et cetera. It's just transactions that matter, right? So everything just gets turned into a speculation narrative, you know, a FOMO, Super Bowl commercial, whatever. And the original, you know, underlying asset disconnects from its actual value creation and becomes just a narrative tool for the media and the financial system, especially the retail financial system, to just churn and get transactions, and it doesn't really have much to do with the actual underlying asset and the value of that asset. Okay, that's when everybody just gets into price mode. You know, it's like, hey, I better buy it because I might miss out and I'm going to try to get out at a higher price. I don't really care what this thing does and what value it creates. It's all just about getting in at a lower price and getting out at a higher price. And that's where we're at, you know. This is why, by the way, we have no prices in our app. We don't put price in the app because when people are just focused on price, you know, it may work for a little while, but you're going to pay the price of
in these
focusing on price.
In these moments where, what did you say here? All correlations go to one, and market logic, the economics that we've learned coming into this and that we study, they seem to go out the window in no, everything seems to be moving in the right direction, and there's just, it's chaos. Let me show you where I'm headed with this. You mentioned earlier this, it's about surviving. And it seems like the rule book that we've been studying and how to survive and what this looks like. You talked about bonds, or looking at an index fund, or trying to get into uncorrelated tickers. Like all of that seems to be just jumbled up, and like we can't act on any of that at the moment. And I want to show you where I want to give us a little bit of direction here. Yesterday, I was reading this piece by Morgan Housel, but it's just these are 5 rules to investing. And there's one I wanted to drill into here at the very bottom. I'm going to read it, but you guys can see this here in the video. I think this is a fantastic quote. It's a fantastic rule, but it lacks strategy. It lacks tactic. And I'm hoping that you can maybe do a version 2 here and give us something to implement. But your lifetime result as an investor will be mostly determined by what you're doing during wild times.
So
building
if
wealth.
you had been, you know, like I suggested, freeing up some capital back at the end of last year, right, when everybody was losing their minds to the upside and Super Bowl commercials were trying to convince you, you know, that you could be pals with Giselle and Tom Brady, if you would go, you know, sign up for an account at FTX Okay. I mean, it's crazy, right? What does Giselle have to do with being a successful investor? Okay. Tom Brady knows a thing or two about football. I'll listen to him if I want to play football and I want to be a quarterback, but not about investing in crypto, or Matt Damon. Give me a break. Or LeBron James. The signs were on, the writing was on the wall. So not losing your head when others are losing theirs in a period like the Super Bowl commercials means you're selling. Okay. You're lightening up. Maybe you're not getting totally out, but you're not buying into such obvious, ridiculous, preposterous, manipulative sales propositions. Okay. So, and then, you're patiently waiting for a time like we're in right now, like Warren Buffett, to put your assets to work. Remember how much he was getting criticized all during 2021, right? Missing out. I've been through a couple of those cycles watching him, and Vlad Tinef and Robin Hood are criticizing Buffett and Munger as being elitist and out of touch. Yeah. Okay. While they took their IPO public at $38 a share, sold it to their customers, Robin Hood, that is. And today it's at $7.11. Way to go, Robin Hood. So that's just, it's obvious when you're looking at it. It's obvious right now. This is a time when people are kind of, all correlations are going to one and people are losing their minds in the other direction. I don't think it's quite over yet because you still hear hopium out there of people going, oh, it's going to buy some triple leverage QQQ here, baby, and get back to my all-time highs soon. No, it's over, man. It's over. So start coming up with a new paradigm. Your old one's busted.
Do you I'm shifting asset classes a little bit, but I feel like each market individually has taken their own hit. And one of the markets, one asset class I've not hit on ever, I think in our conversations, is real estate. You gave an example of real estate earlier, just sort of drawing some comparisons with this example. But I guess first, do you own any real estate outside of your primary residence? Is that something you invest in?
Yes.
Yeah.
Yes.
I mean, even if not, I'm trying to house hack here at the end of the year. I've personally felt this, but there is this index called the Affordability Index that we've been tracking. You can see, I mean, early 1990 before then. And this is from last week, where the Affordability Index saw the sharpest decline year over year that we have ever seen since tracking the index. There's this perfect storm of surging home prices plus this mortgage rate cut caused a year over year dip of 29%. You can see that compared to some of the other collapses that we've witnessed. But question is, I mean, zoomed out just market wise, any take on real estate, the real estate market? But what I really wanted to ask is this: towards the bottom claims that we're at the peak of this bubble, and that things should start to hopefully right size here in the coming months, just due to where these numbers are at. Curious if you had any take on this. I know real estate is not where we spend our time, but this is taking a beating, and I wanted to see if you had any just a perspective on it.
This is affordability that's taking a beating.
Correct.
Yeah. Well, it's hard for me to see prices being sustainable at the levels that they're at right now. Although I do think that people are still putting more kind of mental and emotional energy into a home, right? Because everybody feels the instability of everything going on around them, and you want something, where you can hang your hat. So I think that tension will persist for a while, but look, people are getting laid off, interest rates are soaring. It's hard to see how real estate sustains its current levels, right? Yeah. And I think cycle wise also, there's a famous real estate cycle that pretty sure had been predicted to top in like 23 or so. So this feels consistent with that. By the way, we're also in the 100-year cycle range of major stock market crashes, 1929, 1825, 17, 20 to 30, somewhere in there. There's been kind of 100-year floods in the stock market, right? And that could very well be what we're starting to experience right now. Okay. So, but again, I think my main message today, Josh, is like, if you're thinking about what moves can I make to get free money, got to stop thinking that way, right? You have to start thinking about, again, going back to Ben Hunt and his epsilon theory, he talks about make, protect, teach. These are the three things that humans do that provide value. You're making something, you're protecting something, you're teaching something, right? Make, protect, teach. It's a powerful idea, right? Meanwhile, what's been going on is people have been what he calls LARPing, live action role playing, okay? You're not making, protecting, teaching, right? You're live action role playing. You're on social media. You're pretending to be someone that you're not, and you're just exchanging narrative. You're not making something, protecting something, teaching something, right? So we just have to start thinking in terms of, how do I create value, whether it's, going and learning something and building your skills, or maybe you're at the point in life that you got to build something, right? Or you're, building a business can be that's a form of making. I've been very surprised at how fulfilling, being an entrepreneur can be, right? But we got to make something, we got to protect something, we got to teach something. And we have to get away from this virtual finance, virtual reality, because we can't keep refinancing that fantasy at lower and lower rates. Okay. It's now that genie's out of the bottle, and that world doesn't work anymore. The sooner people can realize that, like, we got to get back to work, we got to start producing, we got to start collaborating, we got to start building, those are the things that have to happen in order to have a decent future together.
I wanted to end on a couple questions around Jack Dorsey, but I can't, that's too good of a monologue to screw up. I think I'll punt these questions. I'll give Jack a small shout out here, as the man's been grinding the last couple of weeks. He's launched this Bitcoin Academy with Jay-Z. He's now also announced that he's starting Web 5. So those are my two little hints, and I'll bring those to our next conversation. But Monday morning, man, you really brought it. I appreciate you giving me a few minutes of your time, Richard.
Hopefully Jack's serious about what he's doing, and he's not just out to be an early adopter selling his stuff Ponzi scheme style to late adopters. And, I have some hope that he is. I'm not saying that we can't build digital things that bring new value to the world, right? But people have been in the mindset that they don't have to build anything. They can just, it's a one-way bet up. And that's what we got to get rid of.
Yeah, that make, protect, teach, this Bitcoin Academy feels very teach-esque, and there's something inspiring about what is Jack's $5 billion net worth, Jay-Z's 1.3 billion. They go back to Marcy House just to have an impact locally and teach things.
There's people in Bitcoin, who really are trying to create a parallel economy with it, right? Like, that's serious stuff. But the Super Bowl commercials, And the mindset that, to let it get to that level where you have no idea what Bitcoin is, what it does, what it could do. All you know is that if you don't get in, you're going to miss out.
Mm.
You're not brave. You're not friends with Tom and Giselle. That is such foolishness.
It's
I can't
crazy.
believe it, and I can't believe that we let this happen over and over again. And that's why, I end up calling it organized crime, because we know better. This is utter foolishness. And just keeps happening over and over again. So wake up.
That's what I brought to you on a Monday, man. I'm going to punt these other two questions to our next conversation, but I liked getting my week started with this. It was refreshing. I appreciate your time.
Oh man, thanks. Good to talk to you.
Have a good one.
Bye.